investing in Nigeria, I said this is a beginner's guide. So either you're a beginner or you're already somebody who has been investing in the Nigerian market and you don't even know why you are investing. The truth is, a lot of people are investing in Nigeria and what they're just doing is following the trend. They don't even know the exact reason why they are investing. Yet, all they want to do is just what? Make money, make money, make money, and print money. But is this what this is all about? Should we invest blindly? Should we invest in what we don't know about? Should we invest because others are investing? All of those questions tonight, I'm going to answer all of those questions and you gain clarity tonight. So, without wasting time, let me go to why people fail at investing. Ignorance. Thank you. David said ignorance. So, what you don't know, you can't act about it. What you don't know, you can't act about. So, if people don't know about investment, obviously they're going to fail at it. Now, I have here that because everyone is doing it, a lot of people are doing investment because they can see that their friends are doing it, they can see that their church members are doing it, they can see that is online, is on the television, is online, and everybody is doing it. But should that be your reason for investing? Should you invest because just everybody around you is investing? You're still going to find out that tonight. But I must tell you that that is one of the reasons why people are failing, because you feel Mr. A has invested and you also want to invest. I'll tell you a story quickly about what happened in January when people were investing in the cryptocurrency, especially that Trump project. People came in to that Trump project of cryptocurrency, and a lot of people, a few people made money truly, but so many people lost their investments. Now, if you had done that investment just because your friend invested, maybe your friend will cash out. But what about you? Because you invested. Now, David said the other time that ignorance. So maybe you invested out of ignorance, or you invested because your friend invested. At the end of the day, your friend is making money while you are making loss on your investment. So you don't want to follow the trend just because everyone is investing. Oh, there's we have the no power right now. Just give us less than 1 minute. You're going to have the lights restored, but that's not going to disturb us. Let's just move on. So you don't want to invest just because everyone is investing. Yeah, Prosper said lack of adequate knowledge, which is synonymous with ignorance. If you don't have adequate knowledge about something, definitely you won't know what to do and you make mistakes. Another one is people are chasing high returns without understanding the risk. People are chasing high returns without understanding the risk. That's another reason why people fail. I remember the issue of when MMM came, a lot of people invested in MMM, while some people were making money. At the end of the day, a lot of people lost their life earned money, all the money they earned in their life. So many people lost that money. Just imagine what happened to CBEX. Not just that people invested what they earned, a lot of people invested the money they borrowed. People invested borrowed funds, loan in CVEX, and see what happened at the end of the day. People lost money. So ignorance. You should have known. Somebody should have told you, or you should have made investigation. What is CVEX investing in? What kind of business are they doing? What kind of business is MMM into? So if you had known, if it's a sustainable business, then you know that, oh, I can invest in this thing. If it's not sustainable, then you know that you cannot invest in it. But unfortunately, people were ignorant. They went to put their money in CBEX, they went to put their money in MMM, put their money in projects that they lost a lot of funds. So one of the reasons why people fail at investing is because you are doing it because everyone is doing it, which means that if you're going to be investing, you need to know your own why. Why are you investing? Why do you want to invest? All right. So let me take you to quickly to your investment journey start from here. Yes, this is where your investment journey start from. So start with your why. Why are you investing? Why do you want to invest? There's a scripture that says um, that the wise builder, when he wants to build, is going to consider first everything he needs before he start investing. Imagine that. Let me just say this quickly. Imagine that you see a builder who wants to build, and it just starts laying the foundation, laying the bricks, and you ask the builder, what do you want to build? And the builder said, I don't know until I finish building. What will you think is wrong with that builder? Everybody that wants to start a building, what they have in mind first is the finished project. If you are building a bungalow, before you start building the bungalow, you have a mental picture of the bungalow even before you lay the foundation. If you want to build a skyscraper, before you lay the foundation of the skyscraper, you have a mental picture of what you want to build. The same thing goes with your investments. Before you start building your portfolio, before you start building investments, have a mental picture. Why am I building this? Building this. What exactly do I want to achieve at the end of this? So there's something you want to achieve before you invest. Is what you want to achieve, this your why, is what propels you to know exactly what you want to invest in. So the very first thing is your foundation. Why? Ask yourself, why do you want to invest? Let me see in the comment section. Why do you want to invest? I want to see in the comment section, why do you want to invest? Let me know why you want to invest. Why do you want to invest? Because this is one question that a lot of people have not answered, yet they are trying to invest. If you don't know your why, you will not know your what. Let me take that again. If you don't know your why, you will not know your what. Is when you know your why that you know what to invest in. I want to see in the comment section, why are you investing? Why do you want to start investing? Let me see you in the comment section. And while I'm waiting for you, so why do you want to invest? Oh, I have my answers here before you say it. Oh, somebody said for the future. Yes, you're investing for the future, but why? There must still be a reason, because the clarity of the reason why you're investing is what helps to build your portfolio. So can you narrow that? Can you narrow it down for the future? But why? Are you retiring for retirement? Are you investing for retirement? I've mentioned one. Can you mention others? Why are you investing? I want to see you in the comment section. Somebody said for retirement. I just mentioned that. Somebody said to create wealth. Thank you very much. For retirement, to create wealth. Thank you very much. So what do I have here today? For retirement plan, it could be for retirement plan, it could be for your kids' education, it could be for wealth transfer, it could be for passive income, it could even be to buy a building, to buy a house, to buy a car for your education. It could be for anything. But the reason why you're investing determines the kind of investment you invest in. Just say, for instance, if you're investing for retirement, it means that your plan is that by the time you retire, of course, you don't want to work again, which means that you need to have built your portfolio to an extent that peradventure you don't work again for the rest of your life. Whatever you have in your retirement portfolio is enough to sustain you for the rest of your life. So when you know you are building, when you know you are investing because you are retiring, because of retirement, then you know that everything that is going to be in your portfolio is going to be long term. So you don't want to invest now and say that, oh, I need it in the next 2 days, I need it in the next 5 days, and you withdraw. Then that is going against your why. That's going against your why. But if you're investing for retirement, you keep putting funds and putting funds and putting funds until it's time for you to retire. So that tells you automatically that you are investing for long term. Can you see how to build clarity now? Number one, when you knew your why, that your why is retirement, then that tells you automatically that you are building for long term. Now let's look at kids' education. If you are if you are investing for kids' education, let's say your children are still 10 years, 5 years, 15 years, then you know that every 3 months, every 4 months, you are paying school fees. January, you are paying school fees. April, you are paying school fees. September, you are paying school fees. So if your investment is for kids' education, you want to put your investment in something that every 3 months you can get your funds out. Every 3 months, something passive is coming. If you're investing in stocks, you want to ensure that you're investing in dividend paying stocks so that every 3 months something is coming out that you can use to pay for your children's school fees. You want to invest in mutual fund that gives you monthly income. You want to invest in bonds that give you quarterly income. Why? Because you understand your why. Your why is your kids' education. If you want wealth transfer for your children, then that means that you are investing for long term. So you keep building a portfolio. So in this case, if you're investing for wealth transfer, then what you are doing is growth investment, investment that grows. You are considering land. You are considering stocks, growth stocks now, this time around. Why? Because it's well transfer. You are considering something that will outlast you even when you are gone. I'm not going to be talking about business now because, of course, your business is one of the things that you can invest in and hand over to your children if you want to transfer wealth. So has land, stocks. These are investment that you put in. These are investment portfolio that you put in your investments if you know you want to transfer wealth. Now, if you are talking about passive income, thank you, Prosper. Yes, for retirement, for wealth. If you are talking about passive income, it could just be that you need something to come in on monthly basis. Now there are investment portfolios that pays you monthly. So when you understand your why, like we said earlier, by the time you understand why you are investing, then you know the kind of portfolio to put in your funds. So which is going to build clarity. Let's talk about other reasons why you are investing that will give you clarity. Let's talk about other clarity. Yeah, we have investing with clarity. Another time is time horizon. You know, the other time when I was talking, I was saying that if you want to invest for retirement, now you know you're investing long term. If you want to invest for passive income, you know you're investing short term. If you want to invest wealth transfer, you know this is long term. If it's for your kids' education, it could be both short term and long term, which is going to determine the kind of investment you invest in. Now, in talking about why you want to invest, I already talked about the time horizon. So if you're investing for retirement and you're just 35, you have to ask yourself, if I'm 35, at what age do I want to retire? At what age do I want to retire? So if I'm 35 and I want to retire at 60, it means I have 25 years to build my portfolio. I hope you are getting it now. I hope you are understanding it now. You have 25 years to build your portfolio to make it strong enough for you to retire. So your why has given you your when, how long. Your why will give you your when, and it will give you your what. Your why will tell you when, how long. It will also tell you what to invest in. So the other time we made mention of kids education, passive income. Now when you're talking about kids education and passive income, it's to tell you that the time horizon is short, not necessarily a long term investment. If you want to invest for passive income, maybe monthly, then you're thinking of, okay, let's talk about dividend paying stocks, which should be giving me dividends from time to time. Let's talk about mutual funds, which is going to be giving me interest from time to time. Let's talk about bonds, which is going to be giving me interest on quarterly basis. I hope you understand what I'm trying to say. If you are getting me and if you're enjoying this section, tell me I'm enjoying it in the comment section so that I can know you're following. Let me know if you're enjoying it. Tell me I'm enjoying it in the comment section. So now, having talked about your time horizon, another one is your risk appetite. Before you think of investing, one thing you have to understand is your risk appetite. Now, when I talk about risk appetite, imagine that let me just paint a quick scenario to you. Have you seen a slim person? Thank you very much, Prosper. Have you seen a slim person with a big bowl of food in his or her eyes before? Have you seen a young guy or a young lady with a big bowl of food and you're wondering, can this person actually finish this food? Thank you, Prosper. Can this person actually finish this food? And before you know it, the mountain will become valley. You understand what I mean by that? Such person will just finish, consume the whole thing in the plate. And sometimes you wonder, how did this skinny person eat this kind of food? And here is somebody like me, as chubby as I am, I will have a small portion of food in my rice before because I may not be able to eat just more than that. Talking about appetite. So we all have different appetites. I cannot compare my appetite to your appetite. The same way when others are taking high risk, you might not be able to take high risk because you're different. You might not be able to accommodate it because you're different. What you can consume conveniently, I may not be able to consume it conveniently. So talking about your risk appetite, how much risk can you take? Because the higher the risk you take, the higher the return. But at the same time, if you take this risk, will you be able to manage it? But I won't go ahead of myself. Let me stay here on this risk appetite a little. So for this, your appetite means that can I afford to take a high risk so that I can get a high return? Some people want that high risk. They want 100% on their investments, 500% on their investments. You want to invest 2 million and get 200 million. Forgetting that the same way if you invest 2 million and it makes you 200 million, you can also invest 2 million and you end up with 2,000 naira. That is the problem of this risk appetite. That is the problem of investing in high risk, high return investments. Because the same way it can make you quick money is the same way it can help you lose your money so quickly. Thank you, David. You said I'm enjoying it. Thank you very much. So the same way it helps you to make quick money is the same way it can help you to lose money quickly. So before you invest, you want to ask yourself, do I want to take a big risk for a big return or a low risk for a low return? When you answer that question, it now tells you the kind of investments you want to go for. So if you want high risk, high return, then you build a high risk, high return portfolio. But if you want low risk, low return, then you be considering fixed income because you know that whichever way, even if it's 20% at the end of the year, you get 20%, you get 10%, you get 15%, but there is no risk of losing your capital and even the interest that is fixed on it. But if it's a high risk, high return investment, you can gain money easily as much as you can also lose money easily. Now, that takes me to risk tolerance. So, having talked about your risk appetite, I will also like to talk about your risk tolerance. Now, your risk tolerance means that the same way I explained the other time that you see somebody with very skinny, with a big bowl of food in his right before, and sometimes even after eating this food, you see that some of them become very uncomfortable, and at the end of the day, you see them rushing to the toilet, vomiting or stooling. Were they able to eat the food? Yes. But were they able to manage it? No. So it's one thing for you to be able to take high risk, is another thing for you to be able to tolerate it. So if you are taking this high risk, can you manage the loss on the investment? If you want to use 2 million to make 20 million, can you manage 2 million and to later make a return of 2,000 naira at the end of the day? If there is a loss on that investment, how well can you tolerate it? If your 2 million suddenly becomes 200,000 naira, will you end up on the hospital bed with the remaining 200,000 naira with drip? Will you end up with drip in the hospital without your 200,000 naira? So you want to consider, peradventure I lose these funds. What will happen to me? Am I going to end up on the hospital bed? Am I going to collapse? I remember when the CBEX issue happened and the MMM issue happened. You hear how people fainted. Were they able to take a high risk? Yes. They had high risk appetite. Were they able to manage it? No. Some of them could not bear it. Some of them landed in the hospital bed. So before you take on any investment, you want to find out as a beginner, how well can I how well can I manage this risk? How well can I tolerate it? Peradventure, there is a loss on it. Now, as an investor, whichever way, you have to take risk. But the matter is, you have to check yourself. Can I manage it if anything goes wrong? Please let's continue to tap on our screen so that we can create an awareness that something beautiful is happening here. Just continue to like. Let's continue to like so that we can create an awareness on YouTube. Please let's continue to like. Let's continue to like so that more people will be aware of what we are doing right here. All right. So having explained your time horizon, your risk appetite, your risk tolerance, then we'll move to the next one, which is your age. Before you invest, how old are you? Now, why am I asking that? How old are you? Because the older you are, the lesser risk you want to take. Now, a 65 or 60 or 55-year-old woman will not want to go and take a high risk, high return investment because such person is close to retirement. Imagine you are retiring at 60 and you are currently 55 and you want to put all the funds you have earned in your 30 years of working in a high risk investment, which means if anything goes wrong, excuse me, which means if anything goes wrong, 35 years of work has just gone down the drain. So your age can also help you to know the kind of investments to put your money in. If you are nearing retirement, you want to consider safer investments. But if you are young, if you are still like 18 years, you still have a lot of time. Even if you make mistakes, you still have time to recover and you learn lessons. But at 65, you don't have so much time to recover like someone who is 18 years. I hope you understand what I'm saying. At 18, you have the time to recover, but at 55, 60, you don't have that kind of time to recover. The recovery time is short. Why? Because your energy level at 55 is low. There's a lot of responsibility. You have a lot of things you're thinking about. You're thinking about your children, you're thinking about your grandchildren, you're thinking about church, you're thinking about the community, you're thinking about a lot of responsibility. Unlike someone who is 18 years old. What such person is just thinking about is education, school, life after school. I want to acquire new skill. I want to friends, no responsibility. But at 55, you want to play it safe. You don't want to run into high risk, high return investments. Even if you want to do it, you want to do it in a lower proportion, maybe 20% of your investments, not all your investments in a high risk, high return investment, so that you don't get to lose all that you have worked for. So your age is important. If you're in your mid age, you want to diversify. Some high risk, some balanced, some low risk. If you're older, 45, 50, 55, you are beginning to move your investments into safer investments as you are growing older. If you are young, you still want to test the waters. You want to try crypto, you want to buy growth stocks, penny stocks, blue chip stocks, you want to invest in land. I hope you understand what I'm saying. If you are getting value, let me see in the comment section. I'm getting value. I'm getting value. I just want to know you're following me. If you are getting value, be honest with yourself. If you are not, you don't have to type it. So if you are getting value, just let me know. I'm getting value. I'm getting value. I'm getting value. Okay, thank you very much. So you understand what I'm saying? You want to consider your age. Another thing is your investment knowledge. You want to know about what you're investing. The other time somebody was talking about ignorance. If you don't know what you're investing in, you will make mistakes. If you want to invest in stocks, find out what is this stock all about. If you want to invest in lands, find out what is investing in lands all about. If you want to invest in mutual funds, what is mutual funds all about? You don't want to put your money, your hard-earned money, somewhere ignorantly. You want to know about what you're investing. Gain knowledge. Find out what you're investing about. You don't want to invest blindly. So I'll take a quick recap on the clarity session. Number one, I said start with your why. Why do you want to invest? Because your why determines your when, which led us to the time, and it also determines your what. So your why determines your when, and it also determines your what. So it tells you the kind of portfolio to build. We talked about your risk appetite. Know how much risk you are willing to take and know how much you can tolerate it even if you take that much risk. Another thing is your age. If you are young, you can take risky investments. If you're in your mid age, you want to have a balanced portfolio. If you are close to your retirement, you want to play it safe. And you always want to know what you're investing about. So I'll continue from there. Now, matching your investments to your personal goal. Having known why you want to invest. The other time we talked about retirement, kids' education, buying a car, wealth creation, different reasons why a lot of people want to invest. So if it's a low risk, then you can know what is fit for you. You know, you have FGN savings mode because they are fixed income investments. So long is a low risk investment that you're talking about majorly fixed income investments. You're talking about money market fund. You're talking about FGN savings bonds. You're talking about FGN bonds. You're talking about blue chip dividend stocks. If you're a low risk fit. If you're a medium fit, you're talking about mutual funds, you're talking about REITs, you're talking about ETFs, and you're even talking about some growth stocks also. I don't have it here, but you can also add some growth stocks if you're a medium risk fit. And if you're high risk, you're also talking about growth stocks. If you're medium risk, you also want to consider blue chip stocks, dividend stocks, very solid dividend stocks. Another one is growth stocks for high risk, startups, crypto. You don't want to be 65 and be dancing around crypto. But if you're 18 and you're still dancing around crypto, you have time. You can make losses and build it back because you still have the time. But at 65, you don't want to be dancing around crypto. You don't want to go and put your funds in one startup capital that you're not certain about. Except you have that high knowledge, you already know that this startup is going to make it. You don't want to go and put your money in some stocks that they are just starting out and you don't even know what to become of them. Why? Because the older you grow, the lesser risk you want to take. All right. Please, if you have questions for me, start dropping your questions. So, very quickly, I want to take a quick assessment. Number one says, what do you want to achieve? So, in the comment section, I want to see your why. Show me your why. Show me your when. We've talked about your why. We've talked about your when. We've talked about your risk appetite. Is it low? Is it high? We've talked about your risk tolerance. Is it low? Is it high? We've talked about your time horizon. We talked about knowledge. So I want you to tell me in the comment section, why do you want to invest? Tell me the time frame. Is it long term? Is it short term? How comfortable are you with risk? Is it high risk? Is it low risk? How well can you tolerate it? I want to know in the comment section. Just keep it coming. Keep it coming. Keep it coming. I want to know in the comment section. Yes, I know we don't have so many people online just because it was supposed to be 6 p.m., but we had a glitch and we had to quickly move it to 7 p.m., unfortunately. A lot of people were online as at 6, but fortunately they are not here, but I know they will watch the replay. So keep your comments coming. Why do you want to invest? Your time horizon, your risk appetite, your risk tolerance. Okay? So while I'm waiting for your comments, I move quickly to the next slide. Now let's talk about case studies. Even though I've gone ahead of myself a little, and I was talking about if you are a retiree or somebody that is close to retirement age, you know that you don't want to go for high risk investments. Just like I said in my previous slide, you want to go for low risk investments. You want to go for treasury bills, you want to go for money market fund, even if you're investing in stocks alone. You want to put your money in solid dividend stocks because when you're planning retirement or you're retired, all you're looking at is how funds will come in consistently. You are beginning to think of passive income because the older you are, the more money you need for maintenance. So you don't want to go and put your money in a high risk investment that can take your money down the drain in just one day. But if you invest in solid dividend stocks, then you know that you can continue to have passive income that will take care of you for the rest of the time you have to spend on that. Now let's take a case study of a young professional. That's a young person. For such person, you can begin to think of growth stocks, blue chip stocks. Why? Because you still have time. As you are growing, the stock is growing along with you. As you are growing, that stock is growing along with you. So if you are young, you still have the time. Even if you want to have dividend stocks, you can have a solid portfolio of growth stocks. You can still buy land as a young person because as you are growing, that land also is appreciating along with you. But for somebody that is retired, you need funds more than just buying lands. You need consistent funds because by the time you want to sell that land, will you be able to turn it back to liquid? When I mean liquid, I mean will you be able to turn it back to cash on time? More reason why you be considering as a retiree, you consider fixed income and dividend stocks. But as a young person, you're considering investing in lands because it will continue to appreciate as you are growing. You're considering growth stocks because as you're growing, the stock is going along with you. Now, if you're a parent and what you're looking for is paying your children's school fees, like we said earlier, education, you want to look at investment that gives you passive income, treasury bills, mutual funds, money market fund that will give you money monthly, dividend paying stocks that can pay you as much as 4 times in a year. I hope you understand what I'm trying to say. So when you know why you want to invest, it helps you to know the kind of portfolio you want to build. And I'm sure I've mentioned different types of investments we have. We have stocks, we have lands, we have ETFs, we have bonds, federal government savings bonds, FGN savings bonds, FGN bonds, treasury bills, a lot of investments. So when you have known all of these things that I've talked about, that is what is going to help you to know which investments to take. That is what is going to help you to know how to build your portfolio because you have rightly assessed yourself and your personal assessment is what is going to help you to know what to put your funds in. If you're watching after now, if you're watching after the live session and you still have questions, just leave your question in the comment section and I'm going to call it a day from here.